Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 30th, 2021. It is 2:18 p.m. Eastern Time. So I'm starting the video, and I'm going to do updates on, start out with Treasury Bonds. We'll go through in this order. Then updates on the cryptos, Bitcoin, and Ethereum. A quick update on uranium stocks. Those weren't covered on a front page. They were actually covered in the comments section. A couple of traders had asked about those a few weeks back, and I gave you my thoughts, and we hit my target on that. So I'm going to cover URA, which is the uranium ETF. Quick update on corn because it triggered a sell signal, and then those educational stocks I mentioned this morning. Some of those are starting to get some traction today. Doesn't make a trend yet, but I'll just do a brief update on them. Okay, so Tlt Treasury Bonds, that was thrown out as a trade idea back here. We have resistance around 163 or so, and it's been really in this trading range. I had it boxed here. That trading range continues. So what happened is it was a short objective short there around the 153 level. We popped it one day briefly. That's a very bearish. That's a failed breakout, aka bull trap. And in doing so, we put in a divergent high. I'm not sure if that was in my last update or not. And we moved on down. I had targets. I have to revisit those previous videos. I covered it, but I'm pretty sure I covered this trend line as a potential target. We have an uptrend line here, and so that's why I wanted to do an update. Plus, somebody also asked on the site today for an update on the treasuries and crypto in Bitcoin. So there it is. I can't make a screaming case to buy it right now, but we have support just below the trend line. Also, we're pretty good support, about 146, decent at least. It was the bottom of the trading range back here. We broke down, then it was resistance, then we got above it. It was support for quite a while. Look at all those candles there, and traded through it a bit. But either way, so there's the bottom line is we're at trend line support. If you took this short, particularly on ZB, I mentioned how treasuries you really have to load up if you're going on TLT, but the futures, ZB tracks the same one, the 30-year bond as TLT does. It's going to give you more bang for your buck, and so you may want to take profits. The other thing that I've noted on here is this is the PPO. It's above the or back testing the zero line, and as you guys know, if you follow me for a while, it's one of my favorite trend indicators. It does a great job of telling you when the trend is bullish. When you're above it, you can see we're rallying. Here, I'll just draw it out this way. Rallying, and when you're below it, as you were all this time here, and there's a great example. Look at all these back tests from below that kept the trend going bearish. You can see we're in a bearish trend, right? And then we made a bullish crossover right here, and we were in a bullish trend up until this point. We made a bearish crossover, and we had a bearish trend. Simple stuff. Sometimes the trends last longer. And again, the point is that often you will back test from above and hold there. So again, I would, if anything, be at least covering the short or lowering stops to protect profits, or even reversing into a long. Can't make a screaming case. Give it a little room if you do. I do think we'll probably bounce here off that 146, if not right now off the trend line. You can even look at the 60-minute chart. Positive divergence right there. I believe in the previous updates about a month ago, I showed you we might work our way down to this trend line, but the fact we have positive divergence in place now, and we could zigzag down. So again, my point was we have support not too much further below, so maybe a scale in from here down to there, and add partial position now, add to it there, or of course use ZB if you want to get make it worth your while. This is the 2-hour period chart. So you can see that we've had just a lot of rejections up around this level, and that's what was mentioned as a short. I think back here around the 162 300 level, that was that's also resistance there. And so we failed. We put in negative divergence at that recent high, and we've been working our way lower. But we're close to the uptrend line on this 60 or 120-minute chart as well. So at most, I see another jog down before a rally. So I think it's an objective long entry. I can't make a screaming case to buy. I only have a little bit of divergence. I could draw divergence this way right here on the PPO, but not so much on the RSI. It's making a slightly lower low. Okay, next up, Bitcoin. I'm going to show you the last update. I had the December contracts, and I've rolled into the January here. This is the old one. This one was posted back on, I always time and date stamp my charts, December 7th, and showed a scenario here that we still do have resistance just overhead. and I said, look, you can take a bounce. We were at support. I mentioned there as a trade. But I still think we're probably going to work our way down. If we get here, I'd really like to see, and that's the scenario I had drawn back then, again from December 7th, that we would take another jog down and then put in a divergent low right here. That's what those arrows show as a scenario, putting in a divergent low, and that's actually what we did. Let me fast forward. The price levels are going to change a little bit because we're on a new contract, but here it is, the January contract. And so December 7th was back right about here somewhere, maybe, nope, probably about there. And you can see that's exactly what happened. We went in, made a divergent low right there. There's your divergence, as those arrows showed. And we did have a bounce, but they faded the bounce, all of it so far. And based on a lot of things, including the daily chart on Gbtc I'm about to get to, I think we may take another thrust down and put an even larger divergent low in before we bounce. And I think I said it before, I'd really like to see it get down to that 41, 484 level to enter a swing trade for a little bit bigger bounce. All right, let me go to Gbtc, and there's BRR, you can see up there. Gbtc, Bitcoin Trust, Gbtc. I'll start out with a daily chart. This one's very busy. It has all the divergent highs, divergent lows, so many trade ideas on here with targets and all that, all of which were hit and played out. This was, it just worked so well to the technicals. And it's because really Bitcoin and these cryptos, they don't have any fundamentals. There's no earnings. There's no debt. There's no share buybacks, share dilutions. You know, it just, and so therefore I think that's one reason they work very well to the technicals. And a little cleaner version of this shows you like this. You had a big divergent high put in recently, and that's why I think we could see more downsides. You have pretty much move up here. There was a major reaction high there, another one there. So pretty much a triple top. And in doing so, we put in divergence here. And if we get down here, I'd really like to see a move down to about the 24 level right there. It's pretty good support. And if the charts are constructive at the time, look to go long. There's also decent support here if you want to step in, 31.74. And there's resistance right there at about 40.87. So that's it. We just hit resistance. We're kind of, those are your levels, you know, bullish if we can break above there. I'm leaning towards another thrust down to that 24.05, but I'm not banking on it. 60-minute chart looks like this on Gbtc. You had a little falling wedge there. We broke out, put in a marginal new low, and just made a little bit different, larger wedge right there. Positive divergence, rally. That's that rally I showed you on the futures. And look, here's the thing. Any additional new low, marginal new low now, will still have divergence. But again, I'd rather wait for it to go down. I'm standing aside this one now, but I'm sharing my analysis for you guys if you want to take it, whether you want to go long. I'm not comfortable going short right now off the divergent lows, but that's the way I'm leaning here. That would be a move down to about 31.60, pretty decent support. You have a gap right here and some support, big old gap, and then another reaction there. So that's my preferred scenario. I'd like to see that, and then I may be interested in playing it long for a bounce trade and maybe even short it after that for the next leg down. The other cryptos, ETCG, Ethereum, that's not it, ETCG, there we go. Let's go to daily chart. That one, just let's see, this chart is just not, it doesn't excite me. You have some divergence there, and we had it here when we hit that 1734 support right there. It was pretty good support, and we're a little bit below it now. If it can recover that, great. Here's a trend line. I'm not crazy about it because there's not a lot of reactions. There's a few there, but that's a cluster reaction. So to me, there's really only two distinct areas of reaction, and that's not really enough to make it very valid in my opinion. And there's a positive divergence, but again, only on the RSI, not on the PPO. And so you know, I favor a drift down here to about that 1109 level, and if we do have some decent divergence there at the time, I might be willing to step in, maybe take a long there, and if we can validate this trend line further, and then we break out, then we could get a nice rally, and I'll give you targets. So ETHE is your other variation. I think this is Ethereum 2.0. And the story on this one is we put in, over the last couple of years, since it launched back here's early 2020, we had a big divergent high there, and most recently a divergent high right here. These guys resulted in big corrections. We dropped from about $30 up right here all the way down to $6 or $5, something like that, right about there. Yeah, about 450 actually. This one we dropped from $45 roughly down to about $17. So you can see those are big drops. This one not so much so far. Now looking at the glass half full, there's a trend line right here, potential trend line. If we get a reaction off there, you could step in. There's even better support down here about 2661. I'm favoring a break of that trend line, move down there, another potential trend line that may come into play. So here's how I could see this one playing out. And again, my convictions aren't super strong. Whether we bounce on this trend line or not, ultimately break it, hit 2661, come on down here, have another reaction on that trend line. And ultimately, I wouldn't be surprised to see Ethereum go and test this longer term primary uptrend line. Be a huge drop. Ultimately, a drop from almost 50 down to, if we hit it when I think we hit it, if we do hit it, I think that's probably going to be at about March or so, just based on my analysis and the fact that stocks and securities like this usually fall a lot faster than they rise. So again, it would look something like that, probably hit that around March or so, and that would be a huge drop. But it would also come back to this primary long-term trend line. So if the charts are constructive there, great. We may never see that. Overall, the trend is more. It is a bullish trend overall. So again, I showed you, if you're a crypto fan, you can step in here at this trend line, and if not, step in again at 2661. Doesn't work there, step in here. So I'm giving you the levels, but I'm also giving you a trade that I'm not super excited about at this point in time. And then let's see, what did I say next? We would cover the uranium stock. So just a few weeks back, here I have a screenshot. This is the chart I posted on the site right here. URA, let me pull it into the screen. And so what I said, that was posted back on October 13th. People asked me about the uranium stocks, and then one of the comment sections under posts, and here's my answer. Uranium sector is still in a solid uptrend. So meaning don't short it, don't step in the way yet. There's no sell signals. Although the sharp negative divergence as of today's marginal new high indicate that the upside is likely very limited before the next correction. So if you were watching this one, you can see I showed you a scenario of a little more upside with that small arrow right here, little yellow arrow I drew, putting in a divergent high and then correcting back to this target zone, which is 2291 to 2371. And I gave you a second target, which would mean I'm looking for a bounce there, and then a pull back down here, next leg down to 1709, or roughly 7, we'll call it 17. That was then. This is now URA. Remember, that was October. That's exactly what happened. We just made a marginal new high just as I drew. And went exactly to where I said we'd go, down to the T1 zone. We've been hitting the bottom of it, and of course we had a couple reactions off the bottom of it, but we continue to flirt with that. You also have the 200-day moving averages coming in there, and we've had enough reactions on it, been consolidating, that I think it's ready to break. PPOs are pointing lower. A little bit of divergence. You can make a case if you want to for bounce, but I think you can get ready, take out the recent lows. That should open the door up for my next target. Again, we hit my first target, got my reaction, typical reaction, both a bounce and a consolidation, and it's now a solid move down below those recent lows. Should take us down to that 1709-ish. Cover a little bit above that. Call it 1720. You want to probably step in to be safe. It'll probably hit that level, but you might want to cover around 1730, 1740. That would give you, if you shorted it anywhere on that marginal new high around there, that's going to be about a good 42% gain for you. Or, most people were long back then. So if nothing else, hopefully, I was able to save you a big give back in profits from the top. So far, we've already dropped from down to the recent low about 27.5%. So that is uranium. Next up, I told you corn popped below the trend line I highlighted yesterday. Okay, and here it is. So here was the trend line I was talking about. So we recently put in this divergent high right there. And I said right below the trend line we had support around 55.97.309 right there. And that was taken out. So there's your sell signal or objective short entry on corn today with a break of both the trend line and that level. In fact, we back tested it. We're a hair below it now, so it's still an objective short entry. You can see all my targets, but I do think there's a good chance we'll come all the way back down to 553. So that'd be a nice swing down there on corn. And ZC is corn futures, or you can trade the ETN, which is simply CORN for the symbol there. And then last but not least, just a brief update on the educational stocks I laid out today. That would be, I know COE was one of them. So COE has since gone on to pop the trend line, i.e. that's a breakout. It's impulsive. It's on high volume, above average volume. This is the biggest volume today so far in a while. So that's what I want to see. So there's one of them breaking out and up at this point in time 21%. Targets remain. I already gave you charts. You know what the targets are. So PPO starting crossover, looking like a bullish crossover in place. So if we can get some follow through tomorrow, we can start to get some momentum. And one thing I'll say about these, they're still very aggressive trades. That nothing's changed there. It could turn around and this could be a false breakout, and the bottom can fall to these stocks. Seriously, don't put any more into any one of these companies than you're willing to lose if tomorrow you woke up and this thing was, filing for bankruptcy or any of these. Again, I like that shotgun approach. I told you, I gave you 5 of my favorites and spread it around. That's what I do. And if the charts continue to firm up, you can add to them. But there's a potential for an explosive short cover and rally in these. And otherwise I wouldn't throw them out there. I did, I think, a pretty good job outlining all the risks in playing with these low volume, low price stocks with horrid fundamentals. But that's again your call if you want to trade them. Let me just highlight a few, update a couple of these. This one, I'm trying to remember which ones. I have a watch list of those. That one already broke out. I think I shared this one today. If I didn't, I shared it in the video a couple weeks back. PRDO, you had a big divergent low, a breakout, and a back test. That's why that one's an objective entry already, because we already broke out and back tested. But the other one's moving. TAL, I gave you that this morning. Nice bullish engulfing candle. It's up about 16.5% now, so it's built on the gains from earlier. Strong divergence forming. PPO looks like it's ready to make a bullish cross if we can break out. So again, what you want to see on this one is more upside, and the more of these stocks that go up, the better. The more likely it is to bring attention to the sector and get the shorts starting to get squeezed out and get some momentum traders jumping in on the long side. You can have your first target zone there, and then if it happens to really take off, it'd probably take a fundamental catalyst, but not necessarily. Sometimes it's simple as a technical catalyst. There's a massive gap to be backfilled. COE, I already covered that one, my apologies. And then GOTU's moving as well. And actually just now starting to break out. It's up about almost 30% now on the day. Another bullish engulfing candle. I like to see that. Remember I said you want to see bullish developments, and that's certainly a bullish development, a bullish engulfing candle on high volume. If it can break out, great. And you have my targets, and don't underestimate, again, these are, you don't need to put a lot of money in there. You don't want to put a lot of money because you could lose a lot if if one of these stocks just goes poof, or all of them. But it doesn't take a lot, from where I threw it out today, somewhere down in there earlier. If it hits, this is just my minimum swing target right now. I have, I'm sorry, not my minimum. Technically, my minimum target's 276. My minimum preferred swing target, if these guys start to pop, would be the bottom of those gaps. The top of the gaps would be my max targets. So at this point in time, I'm just looking for a move up there, and that one would be about 430. That'd be 155%. So again, you don't have to put a lot of money in something if you make 155% to make it worth your while. And that's about it. I think I showed you YQ as well. That one's not really doing too much. It's up 7. Believe me, that's just run-of-the-mill noise. And these stocks, they're low volume, low price, so they're going to go up and down, 10% a day on a lot of days. Either way, just wanted to give you that update. So like I said, the primary takeaway from that is So we've seen some bullish developments since I got those posts out here this morning, and I'll continue to monitor those. And if we have some more follow through to the upside tomorrow, might be time to add to those positions. Or if you're waiting to see some bullish developments, I'll continue to update the sector as long as there's something worth mentioning. All right, let's wrap it up here. I'll get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.